So we are talking about incorporations, and the question I often get is, how will incorporation change my bookkeeping? Will my tax write-offs be better in a corporation? I hope that this video will help clarify the write-offs in incorporations and sole proprietorships so that you can make better business decisions. Now, I regularly have gleeful new business owners sitting in my office convinced that incorporation is the key to better tax write-offs. Hollywood and the media seem to have made incorporations into magical tax havens. Stories of big corporations paying virtually no tax are splashed throughout our news headlines and social media feeds. In reality, write-offs and deductions are virtually the same for either a sole proprietorship or an incorporated business. There are very few differences between the two business structures. Now, there are a couple key variations. Let's go through these together so that you can be a well-informed business owner. So the first difference is that sole proprietorships cannot, I repeat, cannot claim mileage. I have had so many small business clients providing us their kilometers, and they end up speechless when we ask for gas, insurance, and repair receipts. A whole year's worth of vehicle costs down the drain because they were misinformed about the write-offs they could claim. Only actual vehicle expenses like gas, repairs, and insurance can be claimed in sole proprietorships. Unfortunately, they can't claim mileage. Only incorporations can. So please check out our other videos on vehicle expenses if you're claiming vehicle costs so that you don't miss out on deductions. Now, the second difference is WorkSafe. Oftentimes there are carve-outs for business owners' personal earnings in sole proprietorships. This compares to corporations where these exceptions aren't often in place. One client of mine had a robust sole proprietorship in the construction industry. Now, WorkSafe was a big concern surrounding their incorporation decision because of the additional costs they would have to face on their shareholder earnings. So as an incorporated business, you as the business owner are usually required to pay WorkSafe on your own earnings. And this is whether you're taking a salary or dividends. Now, this can add thousands of extra dollars to your WorkSafe bill, especially if you're in an industry with a high danger rating, like construction. Because of the additional costs, it's worth considering the WorkSafe component before you decide to incorporate. Now, the third difference to be aware of is bookkeeping. Bookkeeping becomes more complex and more important in a corporation. Why, you ask? Because the business bank account must be tracked in detail. Now, how does this impact you? Well, with an incorporated business, any funds taken out for personal use, whether from wages, dividends, or your child's school supplies, can impact your personal income taxes and do need to be tracked. I've seen many clients get in trouble with this. Not understanding the importance of their corporate bank account has landed them with surprise tax bills that can be astronomical. This is devastating. It can ruin marriages and close businesses. One client of mine even had to sell their business just to pay their tax bill. Many clients assume that being an incorporated business means lower taxes. This is not the case if you use all the money in your corporate bank account for personal use. The perception that write-offs are better in a corporation lands a lot of clients in hot water. There is no greater flexibility with write-offs in a corporate bank account. Just because it was spent from a corporate bank account doesn't make it a tax-deductible expense. So as we wrap up, let's go back to our original question. Will your tax write-offs be better in incorporation? Probably not. Inventory costs, equipment purchases, and your child's school supplies all have the same tax treatment, either in a sole proprietorship or an incorporated business. I hope that this video has helped debunk the myth that corporations have better tax write-offs so that you can make better business decisions. If this topic has interested you, be sure to check out our other incorporation videos so that you can be well informed. That's all I have for today on incorporations. Bye for now.